Yo, what's good everybody? Welcome back to the final video inside of section 8 covering all things price action related. Now, today's video guys, I just want to add, a few more tools to your tool bag. And if you really like these, you can implement them into your own trading strategy and your own trading methodology. These tools are, tools that I have used in the past, which I just no longer use. I don't really know why. I guess you could say I kind of grew out of them or whatever. They are effective, but I'm going to be honest with you guys, I believe that just pure price action is the king, and just trading market structure and, support and resistance and market patterns and candlestick patterns is much, much more effective than using lagging indicators, such as the next three that I'm going to be kind of showing you. And then they're just basic tools. Once again, guys, I just want to reiterate the fact that I do not claim to be an expert. I don't claim to know everything about markets. I'm sure there are people out there who, know these tools much better than me and who use them every day and can explain it better and are much more successful at it. That's completely fine. What I'm going to be doing today is going over 3 tools that I've used in the past and explaining, the basics, how I use them and how I became profitable using them. With that being said, guys, let's jump right into the first ones. Now, the first one I'm going to go over, it's called simple moving averages. So you're going to go to the indicators tab. You're going to click. You're going to type in moving average. Okay, and you're going to click this first one. It's right here. It's under technicals. It'll say moving average. You just click it. Okay, now I need 2 of these, so I'm going to do the exact same process. Indicators tab, moving average, and click. Okay, so now I should have 2 moving averages. They're probably the same, so they're hovering over each other right now. And I only use moving averages on the daily, so just go ahead and change your time frame to the daily. And you're going to click the settings. Doesn't matter which one you click because you're going to change them both. But you're going to go to inputs. You're going to change the first one to 20. We want a 20 moving average. It should be 20, close, 0, SMA, 5. You can pause the video, copy these settings if you need to. And then I like my 20 to be red. Okay, so I'm going to change the color to red. And then just copy and paste the settings. If you need to, pause the video. Okay, and now the other one I'm going to change. Click the settings, go to inputs, change this length to 50. Okay, so now I have a 20 and a 50. I'm going to click OK. Oops, my bad. I'll go through these settings so you can pause the video if you need to. And then I like my 50 to be blue. Pause the video if you need to. So now what are moving averages? Moving averages, it's very simple. It's just a moving plotted line showing the average of price over a given time increment or a given length increment. So we changed this one to 20. So this is signaling 20 bars of data. It's the average over 20 days. Okay, and then the other one is 50. So it's the average price over 50 days. And now this plotted line is always going to be moving because price is always moving. If price was stagnant and stayed right here, these lines would not move. So it's just a simple way of showing the average price. It's really easy way to kind of determine trend if you're having a tough time with it. Obviously people use it for, there's probably way better ways of using it than what I did. Literally all I was taught was, it's very simple. If the red is over the blue, you're looking to buy. If the blue is over the red, you're looking to sell. Okay, and I mean, that's the most basic way to explain it, and that's really all you need to know. I'm sure, like I said, if you find moving averages interesting, go to YouTube, type in moving average strategies or whatever, and then just do your own research on it. But once again, guys, it's not important, or my fault, it is important if you want to do this, but it's just not necessary, right? If you want to use just price action, pure technical analysis, then you'll be fine. You don't need moving averages. Like I said, I've used them in the past, but it's not like I was ever like, locked in on them, you know what I mean? So what I'm going to do now is I'm going to press this cool X button and get these things off my screen because I don't use them anymore. Now, diving into the next one, the next tool that we have, so we've implemented the moving averages, and then now you can implement what we call trend lines. So I already have the tool highlighted. You should too, because remember, whenever we break it down and we go into the 15 and we do this, we hold the shift key and we draw like our very, very minor structure, that's what we use trend lines for. Another way you can use them is actually how they're designed to be used, and it's highlighting trends. So I'm going to change the chart. I'm going to go to USDJPY. I already have a section kind of highlighted just to make it easy. Now you can, these are everywhere. It's the exact same way that we identify structure. You're just looking for multiple touches. God dang it. You're just looking for multiple touches. So let's go over here to this highlighted section that I have. I don't really remember why I have it highlighted, but we're just going to look at it and find out why. Okay, so trend lines can be seen on any time frame. Understand that the trend line on the daily is going to be, more heavily, I guess, strong. It's going to be stronger than 1 hour trend lines. Same as support and resistance, which is why we identify our support and resistance on daily time frames. But anyways, nonetheless, how you use a trend line, it's very simple, guys. All you're doing is, so once you've identified, hey, there's a trend here, we got a higher high, higher low, all you're doing is grabbing a trend line. If we're in a bullish trend, you're touching from the low, and you're just carrying it over to the next low, okay, the next higher low, okay? And now, obviously, if there was another higher low and another higher low and so on and so forth, that's really how you use trend lines. Now, the power that is in trend lines, I'm trying to find a good example here. Okay, perfect. It works the exact same as support and resistance, supply and demand zones, however you want to do it. Some people do it from the wicks, some people do it from the bodies. For now, we'll just kind of go here, okay? So now remember, when we're looking at areas of support and resistance, now just think of this chart. If I could turn it sideways a little bit, so this slanted trend line was flat. Okay, now think about it. If support and resistance, we're taking buys off the bottoms, right? We're taking buys, for example, if price did something like this, using this white daily support. Okay, if, it rejects, comes back in, we're looking for buys right here, correct? Because it's a double bottom pattern on a major daily support and resistance. It's the same thing with trend lines. You're looking for, 1 touch, 2 touch, 3 touch. Okay, you could be taking entries off this trend line. Okay, it's a very simple way of doing trend lines. And then it also works the same as if you have a break and retest of a support and resistance. For example, if you got something like this that breaks through and comes back up and retests, it's the same thing on a trend line, other than the trend line is going to be slanted. Okay, so what do we have here? We have comes back in, comes back in, comes back in, comes back in, and then we have a higher high. So now we have bullish trend, okay, which can be identified with the trend line, and then we broke through that, came back up to retest said trend line. Okay, it's the same thing as market structure. You're taking sells off of that. Okay, it's the same thing as support and resistance, whatever you want to call it. Okay, so that's just really how you use trend lines. And then obviously, it would be, and then, you can use that as a confluence. You can use trend lines as confluence. So, we have, bullish trend, shifting to bearish trend once we had the last significant higher low broken. And then we have a retest of that major support and resistance zone, or this market structure zone, not support and resistance, my fault. And then price rolled over. Okay, you can tie all these things together. They all work for each other. You're all seeing the same thing. And then also, hey, candlestick pattern, we have a bearish variation occurring at this major level. Okay, so then I'm entering. Stops go above, either this level, or you could, go up here, however you want to do it. I would do something like that. And then, you're just targeting either these lows over here to the left, or I don't know how you would use a trend line, but I'm just showing you different setups based off of trend lines. And then obviously it works the same way if it's a bearish trend. It just, if it's bearish, you tie. Let me try to find something here real quick for you guys. All right, this is not a good example, but we'll just do it for the sake of being. So, boom. Okay, so in a bearish trend, which it's probably not it's not a bearish, really not a bearish trend right now, but I'm just showing you guys how to draw it. So in bullish trends, we put the trend line on the bottom of the trend. Bearish trends, we use it as a roof. It's the same thing as support and resistance. If it's bullish, we want to be getting buys on the floor, so we would draw it on the bottom. If it's a bearish trend, we want to be getting sells off the roof, which is why we draw it on the top. Okay, so we're taking sells off of, we got 1 touch, 2nd touch. These are valid sells. And then obviously this would have been a valid sell area, but, nonetheless, it didn't work out for us. Okay, and then it's the same thing. We have bearish structure that now flips to bullish structure. Okay, and then we get a retest off of trend line and structure, breakout continuation. It's the same shit. Literally just think of trend lines as support and resistance. Instead of being straight across, it's slanted, following the trend. It's a really easy way of using trend lines. Now, once again, I do not use them anymore. Okay, I guess I do use a trend line tool, but I only use it to highlight ranges. I'll click and hit the shift key and draw it straight across. Okay, so I'm just using it pretty much as a line tool. Diving into the next one, this is the one that everybody goes crazy about and wants to know about. It's called Fibonacci retracement. What in the hell is Fibonacci retracement? Okay, it's this cool little tool over here. It's called Fib retracement. Okay, you can star it, highlight it, put it up here in your toolbox if you want. So what you're doing when you're using fibs, all fibs are is it's a way of, I guess, highlighting and visually seeing how deep a retracement goes. So for example, if we have, actually, I'm going to let you copy my settings real quick. Let me pull that up. So you're just going to, you literally click and then click again and then just copy all these settings. So you're going to have all kinds of lines and shit that you just click out. You want to have, one it's set at 0, 0.382, 0.618, 1, and then, just copy these settings. Very simple. And then you can copy the colors and all that. I'll give you a second. You can pause the video if need be and then scroll down, and then you can copy these as well. Coordinates, copy them if you are, I guess that would change. And then visibility, copy and paste, whatever. All right. So now once you've got your settings the same, so all fibs is it's measuring the retracement. So when we have a breakout to the upside and we have a retracement, okay, and then we have a breakout and a retracement, all you're using fibs for is a way of measuring this retracement. All you're doing is you're taking your tool, clicking from the low to the now breakout high, and you're clicking again, and it places, and it's showing you kind of ideal pullback levels. So I set my gold zones at 50 and 61 because that's a 50% discount or a 61% discount. The more you use it, you'll realize that these are just kind of key levels for whatever reason. It's just kind of the way that the markets move. And then it's just ways of measuring pullbacks, when you want to get in and whatnot. And then obviously I would never just use fibs alone. I would want to have some type of, market structure in line and whatnot, so on and so forth. So really, let's see here. Let's try to get a couple examples. So we have bullish structure, we have a breakout, pullback, breakout, pullback, and then another retest off that same level. Got a feeling it's probably going to be a fib level. Okay, and then breakout to the upside. So how I would use this tool is I'm going to grab it. I'm going to go from the low, which I would probably rule that it's here, but nonetheless, we'll go from here. No, I'm not. I'm going to go off structure. Okay, so it's probably like here to the high. Now, obviously, there's going to be different ways of determining it. I go from wick to wick, and then as you can see here, price pulled back exactly into that 50%. Now, you factor that in with, you have a market structure zone right here. You have a candlestick confirmation, bullish engulfing, so on and so forth. It's so, like I'm saying, it's just another way of measuring a retracement. So now, once again, we have, a breakout. We're waiting for a pullback, a way of measuring that retracement or that pullback. You go from the low to the high. Okay, and look at that. It hits right at 50% retracement. Now, don't get me wrong. These tools are not guarantees, right? This shit can easily go against you and so on and so forth. And once again, I can take this trade just based off of this. Just based off of market structure, I can take this trade. I don't need fib tools in trend lines. And like I said in the very first video, my About Me, I learned how to use all this shit. Like, I had my charts looking like coloring books, bro. And I'm telling you, you just don't need it. Like, you could have, trend lines set up, you can have some crazy shit going on, all kinds of stuff. You can have the path tool drawing it, and before you know it, you don't even know what you're looking at anymore. Like, oh shit, I don't fucking like coloring books, bro. And you just don't need all this stuff, right? Why make it complex when you can literally just do the damn thing, just like this, with one zone or one line, and I know that that's a pullback to an area. Boom, stops go below, targeting highs. Okay, like, you don't need all these tools. Just understand that that's kind of how you can use them. And then on the flip side with that, so if we are in bearish structure, I'm not going to try to find bearish structure. I'm just going to kind of use the path tool. So if we're getting lower highs, lower lows, lower high, lower low, and then so on and so forth. Okay, so the way you use the fib tool, if we're bullish, you go from the low to the high. If we're bearish, you go from the high to the low. And then it's measuring, after this breakout, it's measuring the pullback of this move. It's measuring that retracement. Now, obviously, this one that I drew here stopped at the 38 retracement level. And then this one, we'll measure this one too. So then you would go from the low, or from the high to the low. And this one went all the way to 61.8 retracement. You factor that in when you have market structure. If it's occurring at a daily level support and resistance, you have a bearish trend. Like, it's just another way of adding confluence to your trade. That's how you use the fib tool. That's how you use trend lines. And that's how you use simple moving averages. Now, you can add those to your tool bag if you want. If you wanted to learn more about them, go to YouTube, type in fib retracement, strategy or whatever, there's literally thousands, okay? And I'm sure that there are people out there who can explain it much better than me, but that's really just how you use them in the most basic tense. And understand that, guys, you do not need to know every single tool, every single indicator, because like I said, you don't want your freaking charts like, bro, I don't even, fuck it. That's a coloring book, and I'm sure I didn't even use this right. I'm sure there are easy, YouTube videos out there that show you how to use that stuff, but you just don't need it, right? You just have the most basic way of determining support and resistance, and then taking trades off of those key levels. With that being said, guys, that is it for this video. I hope you enjoyed the entire part 8 covering all things price action related, and I'll see you guys in the next section. Peace.